Are you trapped in loans and you want to become financially free? Watch the whole of this video because I'm gonna give you a plan which, in case you follow, you'll be able to get out of the loans you are in and ultimately continue working towards you becoming financially free. Of course, we all know out here as adults, we get into loans, not because it is a must to get into them. Sometimes we need loans for us to be able to survive, right? Of course, the loans might assist us solve today's financial problem, but then again, they might cause another problem tomorrow, more so in case we are supposed to pay and we are constrained of resources. We are talking about you incurring interest rate when you are paying any loan out there, and the interest rates can really weigh down on you and woe unto you in case you have multiple loans. Reason being, in case you have multiple loans, they might end up even consuming your income, therefore causing you financial distress. That is why it's important for you to watch the whole of this video, for you to really understand what you need to do to get out of loans and then become financially free. In case you are new here, my name is Afagza Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos about investing and making money each and every day. In case those are kind of topics which you like, down there is a button called subscribe. Click the button for you to be able to subscribe to my channel so that you don't miss any of the videos which I upload each and every day. And while you still at it, drop a like on this video. Thank you for subscribing and also liking this video. Having said that, let's first of all distinguish the type of debts. Debt by itself is not bad, but it can become a great source of financial distress. That's why we have two types of debt. There's good debt and there is bad debt, right? Good debt is the kind of debt which, in case you take, has something called leveraging effect. It can assist you skyrocket a trajectory towards building wealth. It can assist you become much better financially, okay? And we are talking about, for example, debt. For example, in case you take, maybe you have already begun building an apartment. Maybe you're only remaining 10% of that particular building to complete. You take maybe a loan, you complete, okay? And immediately you're able to trigger rental income. Therefore, you are able to repay your loan without pressure. That is an instance of you getting good debt, which is actually assisting you develop, and you have a solid plan towards repayment. Now, on the other side, we have bad debt. Bad debt is simply the kind of debt which you get into, which is not really assisting you build income. It's not really assisting you develop. Rather, for example, you are getting into debt for your own consumption, right? That isn't generating any income. And also it becomes bad on the books in case you are not able to pay, you are struggling, you are skipping payments, or even at the end of it, you default. That is bad because it's gonna taint your financial or credit record, therefore affecting your future financial endeavors. That's an example of you getting into bad debt. You borrow for consumption, not production or even creating wealth, and then end up defaulting, therefore affecting your record. I hope you've understood the difference between good debt and bad debt. And by default, you need to be asking yourself a simple question before you get into debt. The debt you are getting into, is it assisting you build income, or it is going to eat into your income? If it's going to eat into your income, in case you can avoid a particular debt, avoid it. But in case it's really going to assist you build income, then that is probably a good debt. Having understood that, let's now look at the mistakes most adults do as they go about getting in debt. And the very first mistake most adults do is that they typically get a loan to repay another loan without them fixing their spending habit. In case you are in a situation where you're getting into bad debt, chances are the debt itself is not the issue. The issue is your spending habits. Maybe you are accustomed to borrowing for you to be able to consume. You are accustomed to borrowing because you can't control your appetite around impromptu purchase, you name it. So in case you get into debt to be able to pay another debt, and yet you are not fixing the underlying spending habits, chances are you are continuing to build the same habit, which in reality you need to fix the spending habit first before even you think about borrowing to repay another debt. And then the second mistake, which a ton of adults out there do, is that they do borrow to spend instead of borrowing to invest. I've already given you an example with good debt versus bad debt. In case you are borrowing to spend instead of borrowing to invest, that is a bad mistake you are doing. And then the third mistake most adults do is that they ignore interest rate, repayment terms, and any fee. Out here in any borrowing, there is normally a processing fee, there is normally an interest rate, and there is clarity on the repayment terms. So in case you go about borrowing without really reading these terms and really understanding and knowing if you can conform to them, you are setting yourself up for failure because chances are you're going to default. Reason being, maybe the fee is too high. Reason being, maybe the interest is going to become runaway. Reason being, maybe the terms of repayment are not favorable to your financial realities. So always check before you execute or sign any particular borrowing. Ensure you understand the terms fully, you understand interest rate, and even you know if there's any fees, both the visible ones and the hidden fees. And then the fourth mistake, which most adults do, is that they do miss payments, therefore affecting their credit history or record. As I've mentioned, you getting into any debt is a contract you're getting into. And most financial institutions in any country out there, most regulated financial institutions, have a right to report your borrowing, your repayment, the behavior, you skipping repayment, and so forth to a credit reference bureau. So in case you borrow and you skip payment, that is going to end up affecting your credit history, which of course, in case your credit score goes down, it basically means it's going to affect your future borrowing. And then the fifth mistake, which most adults do, is that they do live beyond their means because access to credit is easy. Yes, access to credit might be easy now, but then again, you accessing excess credit, it only means you are really limiting your future incomes because a chunk of your future income is going to go towards you repaying debt. Therefore, try to see how you can check your appetites so as not to be able to get into excess debts just because you can access them. So, assuming you are already in debt, what are you supposed to do for you to be able to get out of it? First and foremost, you need first of all recognize where you stand. A chunk of adults out here have pushed their realities under the carpet. Write every debt which you have down. That's a starting point. By you writing down every debt which you have, you're going to know what you owe who out here. It could be a simple thing as 100 shillings, 1,000, 10,000, 100,000. Write all the debts down. That is going to give you clarity on the total amount which you owe people out there and also the breakdown. After you do that, devise a debt repayment strategy. And typically, we have two strategies, okay? We have the avalanche payment strategy and the snowball payment strategy. The avalanche strategy is whereby you aim to first of all knock off the very high interest, the extremely costly debts, and then go down to the smaller ones. The snowball is where you start with the smaller ones and then you continue increasing the debts which you are clearing. In case you have a stable income, I'd really encourage you to use avalanche method of paying debt. And I'm saying so because that is going to assist you knock off the high interest. Therefore, automatically reducing your cost of the debts which you already owe, and that way you can stabilize the repayments you're going to be making. Because remember, you skipping any repayment comes with interest rates. It comes with penalties. So you aiming to knock off the high interest rate loans first is going to assist you stabilize much faster. In case you have an income, don't postpone. Prioritize clearing the high interest debts first, or the high amount of debts which you have, and then continue clearing the others bit by bit. And as you're doing that, don't just sit there saying you have a salary, so you're using a salary to repay off debt. Also think about how do you increase your incomes. And I'm saying so because you increasing your incomes, whether through freelancing, through thinking about how you can even do remote gigs, thinking about how you can do consultancies, is going to assist you have the money to be able to clear your debts off much, much faster. And when it's all said and done, assuming you've cleared your debts, guys, focus on building your incomes and becoming financially disciplined. That is what is going to assist you be able not to get back to the trap of you having loans. What do you think about this video? I hope you've understood the difference between different types of debts. You've understood why sometimes others make mistakes out here, and also most importantly, you've understood how to go about clearing the debts which you have and also setting yourself up to be able to be financially free over time. Thanks a lot for watching this video. Bye bye, and you all stay safe.